Hi, I'm Debbie from Property Apprentice, and I'm dialing in today for our podcast from our new office. So we've just recently moved offices into 6 Mitchelson Ave in Ellerslie here in Auckland. And as you can see, it's an absolutely spectacular day. So I don't need any extra lighting. It's all just blasting in through the windows. So I would give you a tour of the office, but we've literally just moved in, so we haven't even unpacked boxes or anything like that yet. But today's podcast, I'm going to be talking about the CVs that have just been released. So there's been lots of attention from the media about the significant increase in CVs, especially here in Auckland. You know, CVs have increased by about 34%. So we've had a lot of questions from the public about what that means and whether people should be worried about a high CV or whether they should be worried about a low CV. Because for every single person that's complaining about how much their CV's increased and they're worried about the effect that'll have on their rates, there's also a bunch of people who are concerned about the CV being a bit low. So I thought this was a good time to cover off a few of the fundamentals about the CVs and why you probably don't need to worry as much as you might be. Okay, so to start with, the reason behind CVs, and they're called different things across the country. So in Auckland, we call them CVs or council valuations. In some parts of the country, they're called rateable valuations, and there's also government valuations. So depending on where you live in New Zealand, they might call them different things, but it's essentially all the same stuff. So by law, councils in New Zealand are supposed to revalue properties within their boundaries every 3 years. Now, the last valuation took place in 2017, so obviously we got hit by COVID, and that was the reason that we haven't had valuations until now. So the CVs that have just been released in Auckland won't affect the rates until 1st of July 2022. The valuations are actually based on what was the estimated selling price if that particular property had sold on the 1st of June 2021. So for people that are worrying about the fact that their CVs are a lot lower than expected, that could explain the reason right there for you, because there was some significant capital growth, especially across Auckland, from the 1st of June last year through till now. Prices are starting to plateau a little bit now, but, we have had some significant increase in values. So just remember that these valuations are already out of date when it comes to market value. On that, it's not actually an indication of true market value. So the council valuations are done to basically help the councils to work out how much they need to allocate to each property for the rates. And so just because your CV might have increased by, say, 30 or 40%, it doesn't mean that your rates bill is going to increase by 30 or 40% either as well. So, that's really important to remember, because a lot of people are worrying that there's going to be a significant increase in their rates bill. Now, if we compare Auckland rates to rates outside of Auckland, we've actually got it pretty good here in Auckland. Our rates are pretty low compared to a lot of other places around the country. So, you're not going to get too many people feeling sorry for you as an Aucklander if you're going to have a 2 or a 3% rates increase. Now, as I mentioned before, the increase in the CV doesn't mean that you're going to get that same increase in your actual rates bill. What happens is that they look at it across the board. So you will have noticed that no one's actually come round to your house and had a look at the renovation that you've done or anything like that. So it's not like a registered valuation where you have a registered valuer come round and measure up your property and, have a look at the fancy new kitchen that you've installed or whatever. It's not like that. So, the actual market valuation for a property has got a lot more to do with how your particular property compares to other properties that are have sold recently. Now, the council valuations, they don't go and visit all of the properties. So it's an indication of market value based on recent sales and also based on any council permits that you might have had for any work done to your property, for example. They take that into account as well. So it's based on land value and any improvement value, including those permits that you've applied for. So if you've built a minor dwelling and you've got a permit to do that, then the council will know about that, and that could be reflected in your rates and your council valuation, and then it would also be affected, your rates could be affected by that too. Because what happens, according to the Auckland Council website, the average rates increase is about 3.5%. Okay, so yes, that is a significant increase, but it's not as bad as 30 or 40%, right? So yeah, so that's based on the average. So it'll depend on how your particular property's valuation has compared to other properties in the area. So like, for example, if you've installed a minor dwelling, you are likely to get a little bit higher than the average 3.5%. If your property has not increased in value compared to a lot of the others in the area, so for example, if a lot of other properties have been knocked down and replaced by a new build, and you haven't with your particular house, then you're not likely to get a 3.5% increase. Yours is likely to be a little bit lower because compared to the average for your area, you'll be below the average if your property hasn't increased to the same rate. So hopefully that explains things a little bit. There is a process that you can go through if you want to challenge the council on your values, and I would suggest that you be very careful about doing that. Certainly, if you argue the fact that you think your house is worth more than the council valuation, then they'll be more than happy to adjust that. But I suggest that if you were trying to argue that your property is worth less than the council valuation, that might be a little bit more challenging to get that across the line with the council. And so what we tend to do, and this is just personally, if we get a council valuation that's lower than what we know market value to be, we kind of celebrate that because at the end of the day, the only people that actually take any notice of the council valuations are home buyers and mum and dad investors, So if you're not looking at selling your house, it really doesn't have an impact on you at all. If you are considering selling your house, it is probably one of the most common questions that the real estate agents get asked. And it's something that I'd really like to try and get through in this podcast, is that it is not an accurate reflection of market value. So ignore the council valuations. If you're looking at putting an offer in on a property, don't pay attention to the council valuations. They're done at best once every 3 years. Certainly it's been a little bit longer this time around because of the pandemic that we've got. But on the day that the council valuations are done, and as I said, they're already half a year down the track from the date that they were based on, the market value that it was based on. So, the day that they're done, they might be market value or close to, but they could also be above market value or below market value at that particular time. So try not to stress out about it too much. If you want more information about how to challenge the rateable value or the council valuation, go to the council websites, have a look. They've got quite clear instructions on how to go about changing that. Just understand that if you're arguing to get an increase in the council valuation, there's a chance that you might be actually arguing to pay higher rates. On the flip side, if you're arguing that your council valuation's too high, that could have the reverse effect. So you could actually have a lower rates bill when that comes up, but they will actually reevaluate your specific property. So it's no guarantee that if you put in a complaint that will get accepted. I can honestly say that in the 20 plus years that Paul and I have owned property in Auckland and outside of Auckland as well, we've never challenged a council valuation ever. For us, it's just not been worth it. And I would suggest if you're not planning on selling, it certainly wouldn't be worth it now unless the council's really got it wrong. Okay, so just try not to stress out about it too much and just understand that it's not going to impact on your rates by the same amount that it's increased. Okay, so 30% increase in council value doesn't translate into a 30% increase in rates. Otherwise, the council would be replaced in the next election, wouldn't they? So, people would jump up and down about that, I'm sure. So, yeah, so hang in there, and just if you're wanting to get an idea about what the actual market value of your property is, then have a chat with some real estate agents, have a look at recent sales in the area and see how your property stacks up to those. But if you're comparing it with the council valuations, just bear in mind that was already half a year ago. All right. Thanks for listening.